All right, everybody, welcome back to The Deep Dive, your one-stop shop for really getting down into the nitty-gritty of these crazy earnings calls that companies put out.
That's right. We do the hard work so you don't have to.
Absolutely. And today we are looking at HUYA.
Yeah, really interesting company, kind of a big player in the gaming and the live streaming space.
Exactly. And we want to figure out, can they really transition beyond just that live streaming?
Right.
Can they build a stronger business model?
Yep. And most importantly, for all of us.
For you, the shareholder.
That's right. Can they deliver value? So let's dive in.
All right, let's take a look at the numbers first.
Great.
What did HUYA's full year look like?
Okay, so full year revenue came in at 6.08 billion RMB.
Okay.
Now that number overall is down, but what's really interesting here is where the growth is actually happening.
Okay, I'm intrigued.
So their game-related services, advertising, and all that other stuff that they're doing grew like crazy, over 145% year over year.
Wow.
To hit 1.33 billion RMB,
Okay.
which is now almost 22% of their total revenue.
So that's a pretty huge jump
Yeah.
from what was it last year?
Well, last year was under 8%. So that's a really significant shift.
Okay.
Now, in terms of profitability, non-GAAP net income for the year more than doubled to 269 million RMB.
Okay.
And they even generated positive cash flow from operations for the year at 94 million RMB.
Okay, so it sounds like they're becoming more efficient.
Absolutely.
Yeah.
I think we're starting to see a real picture of transformation emerge here.
Okay, so it sounds like there's more to the story than just that headline number.
Oh, yeah, for sure.
This shift to new revenue streams sounds pretty important.
Yeah, especially when you consider how much the online entertainment industry is changing these days.
Yeah, for sure. Now, what about just the fourth quarter? How'd they do in Q4?
Okay, so in Q4 2024, they pulled in about 1.5 billion RMB in revenue.
Okay.
Now, that new segment we were just talking about, game-related services, advertising, and all that other good stuff, continued to grow almost 100% year over year.
Wow.
To reach 372 million RMB.
Okay.
However, it did see a slight dip from Q3, which the company says is normal due to seasonality in the gaming industry.
Makes sense.
Now, their non-GAAP net income for the quarter was 1 million RMB,
Okay.
which might not sound like a lot, but it's a big improvement from the loss they had in the same period last year.
Okay.
Plus, they also grew their paying user base to 4.5 million. And that's not even counting the folks who only use their game distribution platform.
Okay, so a slight dip in the news segment, but still some strong year-over-year growth and a return to profitability in Q4.
Exactly.
What did they do to make that happen, to turn that profitability around?
Well, a big factor was their gross margin, which shot up to 11.4% in Q4.
Okay.
That's a massive jump from just 1% in the same period last year.
Wow.
This improvement was mainly due to lower fees and reduced content costs.
Gotcha.
They also really tightened their belts across the board, cutting total operating expenses by almost 24% year over year.
Okay, so they're keeping more of the revenue and they're running leaner.
Yeah, pretty much.
That's a recipe for higher profitability.
Absolutely.
Now tell me about their financial position. What kind of cushion are they sitting on?
As of December 31st of last year, HUYA had a very healthy 6.73 billion RMB in cash equivalents and deposits.
All right, so they have some wiggle room to execute this whole transformation strategy they're talking about.
All right.
Okay, so we've got the numbers now. Let's really get into the how behind this whole transformation thing. What does that really mean for the company and for you, the investor?
So basically, they're trying to evolve from just being a live streaming platform to a comprehensive gaming ecosystem.
Okay.
Think of it like their platform is becoming a major distribution channel for games.
Interesting.
They highlighted this game called Delta Force, which saw a huge growth in gross receipts through HUYA's channel.
Okay.
And that was all thanks to their streamers who are actively playing the game and promoting it.
So they're using their existing network of content creators to really make a splash in getting games out there.
Exactly. They're becoming a real force in game distribution.
So it sounds like they're trying to capture more of that value chain in gaming.
Absolutely.
What are their plans for the future in this area?
Well, they've said they want to build even stronger partnerships with game developers and publishers, not just for distribution, but for actually running games together.
Okay.
They even ran some trials in this area in the last quarter, so it seems like collaborating closely with game creators is a major part of their strategy going forward.
Okay. That makes sense. Now, they also mention in-game item sales and advertising. How are they planning to make those revenue streams work better for them and ultimately for you, the user and potential investor?
So they're working on offering a wider variety of digital items within games and making it easier for users to find and buy them.
Makes sense.
For example, they revamped their in-app More section to better showcase popular items and offer some incentives to users.
Okay.
A good example of this was their League of Legends themed game item shop, which launched in January.
Okay.
And they combined that with a Spring Festival promotion, and it actually led to their highest ever monthly in-game item sales.
So they're creating more ways to make money directly within the games themselves.
Exactly.
Now, what about advertising? How are they trying to attract more advertisers to the platform?
Well, their own esports tournaments are becoming more and more attractive to advertisers.
How so?
Well, the sponsorship revenue for their LOL Legend Cup Season 2 doubled compared to the first season.
Wow.
They attracted sponsors from all sorts of industries like beverages, automotive, even local services.
Interesting. So that really shows that their self-produced esports content is gaining some serious traction.
Absolutely. It's becoming a real valuable marketing opportunity for brands.
So they're creating their own content that then draws in brands. That's a pretty clever strategy.
Yeah, it's a nice self-sustaining cycle.
Now, even with all this diversification they're doing, live streaming is still a big part of their business. How are they planning to keep that side of things healthy and engaging for you, the user?
You're absolutely right. Live streaming is still crucial for them. So they're actively expanding their collaborations with other content platforms to reach a wider audience.
Okay.
And in December 2024, they actually hit a record number of viewers, which was way more than their mobile active users.
Okay, so their content is reaching people beyond just their core user base.
Exactly.
Now, esports seems to be a really big part of their live streaming strategy, wouldn't you say?
Oh, absolutely. They provided extensive coverage of esports with around 40 different games featured in licensed tournaments throughout 2024.
Wow.
In Q4 alone, they broadcast over 100 of these major licensed events.
Okay.
But what's equally important is their investment in producing their own esports tournaments and entertainment content.
Oh, interesting. Tell me more.
Well, in the fourth quarter, they produced over 35 of these in-house shows.
Okay.
And events like their LOL Legend Cup S2 are becoming increasingly popular with viewers.
It sounds like those in-house productions are doing pretty well.
Yeah, they're definitely gaining traction. And they even mentioned they're trying to close the gap in viewership between the big licensed events and their own content for the most popular games.
How are they planning to do that?
Well, for games like League of Legends and Honor of Kings, the numbers for their self-organized tournaments are getting really close to the big licensed events.
Okay.
They even claim to be leading the industry in this area. They say they captured over half of the market share for in-house esports events in 2024.
Impressive.
And the viewership for the Legend Cup S2 was almost as high or even higher than some of the top-tier licensed events.
So their own IP is really starting to take off.
Yeah, it is. And they're hoping to replicate that success with other big esports games as well.
Like what?
Well, they're planning to bring this self-organized tournament model to Dota 2 and Valorant in 2025.
Okay.
They want to build the same level of excitement and viewership that they've achieved with League of Legends.
Okay, now obviously all of this content and distribution relies on technology. What are they doing to upgrade their platform that you, the user, would actually notice?
So they've been adding new features to their apps specifically designed to make watching tournaments more engaging. Like, well, for example, they've got customizable themes for tournaments and pre-match analysis tools.
Okay.
They've also added features that let you see in-team chats and even switch between different player perspectives during a match.
So they're making the whole esports experience more immersive.
Exactly. And they also launched a HUYA rating system for esports,
Okay.
which a lot of people have been using. So it seems like users are into sharing their thoughts and opinions.
Yeah, that makes sense. What else is new on the tech front?
Well, HUYA actually became the first game live streaming platform to fully implement the DeepSeek R1 AI model.
Okay.
And they've even launched an AI assistant that can help you search for game strategies and find live channels more easily.
So they're really leaning into AI.
Yeah, big time. It seems like their AI plus live streaming strategy is pretty ambitious.
In what way?
Well, they want to use AI to help streamers create better content more efficiently through things like smart interactions and automation.
Okay.
But they're also exploring AI-powered virtual streamers and other digital IP.
Wow, so they're really thinking outside the box.
Yeah, their long-term goal is to use AI across their entire content ecosystem, from creation all the way to consumption.
So basically, they want to revolutionize the industry with AI.
Pretty much.
That's some serious forward thinking. It sounds like they're making big investments in this tech.
Now, let's get back to the numbers for a minute. Beyond the headline figures, were there any other interesting details you noticed?
Yeah, so even though their revenue from game-related services grew a lot, their core live streaming revenue actually declined in Q4 to 1.12 billion RMB.
Okay, why is that?
Well, they said it was due to the overall economic climate and some industry trends that are affecting user spending.
Okay.
But like we talked about earlier, they were very successful in managing their costs. Their cost of revenues in Q4 went down by 12% year over year, mainly because of lower revenue sharing fees with streamers and reduced spending on content.
Gotcha.
And their service and server costs also decreased significantly thanks to improvements in their technology and better pricing. Okay, so they're facing some headwinds in their main revenue stream, but they're clearly focused on efficiency.
Exactly.
How did all of this affect their overall expenses?
Well, their operating expenses were down across the board.
Okay.
Their research and development spending decreased by 10% in Q4, while their sales and marketing expenses dropped by a whopping 45%.
Wow.
And their general and administrative costs went down by 19%.
So they're really tightening the purse strings.
Yep. This strict cost control is a big reason why their profitability has improved.
That makes sense. It's interesting that they cut sales and marketing so much. Maybe that means they're focusing more on organic growth from their new initiatives.
Yeah, that's a good point. Now, were there any other financial tidbits we should mention?
Yeah. Were there any other interesting numbers in there?
Well, their interest income was a bit lower because they had less money in their time deposits after paying out those special cash dividends.
Okay.
And they also had an impairment loss on some of their investments because some of those companies didn't perform as well as they expected. Now, looking at the full year again, their non-GAAP gross margin improved significantly to over 30%, and their non-GAAP net income attributable to HUYA more than doubled.
Okay, and that positive operating cash flow for the year is a really good sign.
Absolutely. It shows that the underlying business is healthy.
Now let's talk about something that you as a shareholder probably care about a lot.
All right.
Their plans to return capital to investors. What's the scoop?
Okay, so they announced a pretty big shareholder return plan for 2025 through 2027. They're committed to giving at least 400 million USD back to shareholders.
Right.
For 2025 alone, they've declared a cash dividend of 1.47 USD per ADS.
Okay.
An ADS just represents a share of this foreign company traded on a U.S. exchange.
Gotcha.
And this dividend will total about 340 million USD.
Okay.
Plus, they're also planning to distribute at least 30 million USD in cash dividends every year for the next 2 years after that.
So that's a pretty significant amount of money they're returning, especially in 2025.
Yeah, it is.
What's the reasoning behind this?
Well, management said this plan is all about rewarding shareholders, optimizing their capital structure, and making sure they're using their cash wisely.
Okay.
They stress that they're in a really strong financial position with over 900 million USD in cash and equivalents and zero debt.
Wow.
They even pointed out that after paying out this big dividend this year, they'll still have around 500 million USD in cash on hand.
Okay.
And looking even further ahead, they're actually thinking about setting up a more regular dividend policy after this 3-year plan is over.
So they're definitely thinking long term, and they seem pretty confident in their future.
Yeah, definitely.
And they're also buying back some of their own shares, right?
Yes, that's right. As of December 2024, they'd already bought back over 63 million USD worth of their shares.
Okay.
And they've extended that program until March of 2026.
So that's another way for them to return capital to shareholders and potentially boost the stock price.
Exactly.
Yeah.
It shows that they believe in the company's value.
Now, looking ahead, what kind of outlook did they give for the future?
Well, for 2025, their main focus is going to be on this whole commercialization transformation thing, particularly growing those game-related services and advertising revenues.
Okay.
They're planning to strengthen their relationships with game developers, and they might even explore exclusive distribution deals.
Interesting.
They also highlighted their continued investment in AI as a key driver of long-term growth for both live streaming and esports.
So they're not just sitting still, they're actively looking for new opportunities.
Right.
Now, did they give any specific guidance for the near term, like for the first quarter of this year?
Yeah, they did. Actually, they expect their live streaming revenue to be a bit lower in Q1 2025 compared to Q4 2024.
Okay.
Mainly because of the Spring Festival holidays.
Yeah, that makes sense.
They also said that their future profitability will depend on a few things.
Like what?
Well, they need to keep growing their overall revenue. They need to manage their content and streamer costs effectively. And they need to keep their operating expenses under control.
So it's a balancing act.
Exactly. And they also expect their interest income to be significantly lower in 2025 because of those shareholder return initiatives and the declining interest rates we've been seeing.
Okay, so it's a bit of a mixed bag for the near term, but it seems like they're focused on the right things.
Yeah, I say so.
Now, for you, the investor, what are the main takeaways from all of this?
Well, a few things stand out to me. First, the huge growth in those non-live streaming revenues really shows that their diversification strategy is working.
Mm,
And that's super important for the long-term health of the business.
okay.
Second, their improved profitability and their commitment to controlling costs shows that they're serious about financial discipline.
Right.
And third, that big shareholder return program is a clear sign that they believe in the company and they want to reward investors.
Yeah, that's a big plus.
And finally, their investment in self-organized esports and AI suggests that they're really looking towards the future and they're not afraid to innovate.
So if you're thinking about investing in HUYA, you should definitely keep an eye on the growth of those newer revenue segments
Absolutely.
and how well they use AI to boost user engagement and monetization.
Exactly. Those are the key things to watch.
Okay, now for the fun part, this is not financial advice segment where we come up with some crazy, but maybe not so crazy investment ideas based on what we've learned about HUYA.
I'm ready.
What have you got for us today?
Okay, so remember how HUYA is really pushing into game distribution and they want to work more closely with game developers.
Yeah.
So here's an idea. Look into publicly traded game engine companies.
Game engine companies.
Yeah, the companies that provide the technology for actually making video games.
Oh, okay.
Now, here's the crazy but plausible part. As HUYA's distribution platform grows and they build those closer relationships with developers, the demand for certain game engines might go way up within their ecosystem.
Okay, I see where you're going with this.
So investing in a leading game engine company could be a way to benefit from the growth of HUYA's distribution arm without actually investing in HUYA directly.
So you're betting that HUYA's success will lift all boats in the game development world. That's an interesting angle. Okay, now I have one for you.
Okay, I'm listening.
So given HUYA's massive special dividend and their ongoing share buyback program and the fact that their core live streaming business could stabilize after all those cost cuts,
Right.
why not look at the options market?
Okay.
The crazy but plausible idea here is to sell put options on HUYA
Okay.
with a strike price just below the current market price and an expiration date a few months out.
Interesting.
The thinking here is that you could potentially make money from the option premium if the stock price doesn't drop too much.
Gotcha.
You're essentially getting paid for your willingness to buy the stock at a lower price.
Okay.
This strategy is based on the idea that the capital returns and the stabilization of their core business will create a price floor for the stock.
So even if the stock doesn't skyrocket, you could still come out ahead.
Exactly, but remember, folks, these are just ideas.
This is not financial advice.
Absolutely do your own research before making any investment decisions.
Both really interesting ideas that use different parts of HUYA's current situation and their future plans.
And it's a good reminder that there are all sorts of ways to think about investing.
Exactly.
So to sum up our deep dive into HUYA, we've seen a company that's going through a major strategic shift.
Yeah.
They're showing strong growth in new areas, and they're clearly committed to giving back to shareholders.
Right.
Their investments in technology and content creation show that they're a forward-looking company.
Absolutely.
What stood out to you the most in HUYA's report? What do you think of their strategy?
That's a good question for everyone to think about.
Yeah, keep those questions in mind as you do your own research.
This has been a really interesting look at HUYA here on the Deep Dive.
Thanks for joining us.
And be sure to tune in next time when we'll unpack another important earnings call.
Until then, thanks for listening to The Deep Dive.
And remember, this was for informational purposes only and definitely not financial advice.
See you next time.
Take care.